All right, what is going on, Just for family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Thursday. Damn, almost here. Thursday, March the 20th, 2025, year of our Lord. And as per usual, we're going to be reviewing the market. We're going to be breaking down the S&P, the ES futures. We're going to be breaking down Dow Jones. We're going to be breaking down the NASDAQ. And we're going to be taking a look at the volatility index as per usual. I'm going to break down my pre-market plan on the Dow Jones. A couple of you guys made some plans for the ES. Yoga did, Justin did. But I have my own plan. I didn't write it down. So it's the instrument that I was trading. I'm going to go over some of the things I saw, some of the trades I took inside of London. Couple wins today, one loss. And then I walked away pretty clean on the day. So I'm going to go over a lot of that stuff and, sit tight and we'll get you guys out of here. All right. So, and I'm trying out my new little camera setup or whatever for future videos and stuff. Back on StreamYard. I really like what they got going on. It's much cleaner. It works better with my MacBook. So if you haven't seen my face in a while, what's up? Hope y'all doing good. All right. So current conditions, we were rejecting the high of an uptrend. All right. So yesterday, remember, we were in a bullish retrace of a bearish trend, right? Today, we were at the high and we were rejecting the high of the uptrend, meaning that eventually we're looking to break out of this thing, right? We're coming down to the lows. Every time we come to the lows, we come down higher, right, than where we started from. And every time we go up higher. So we're making higher lows and higher highs, right? So that's what you want to see inside of a potential uptrend. But you can also see that the bears are very, very hungry down here because they're not letting price out of here, right? Like easily, right? So bearish as long as we stay below 42,473. And like I told the Discord, I meant 543. I don't know what I was thinking when I wrote this, but anyway, we were bullish as long as we stayed above 41,894, right? Which was the previous day low, right? So essentially we were in a range between PDL and PDH. Major rally yesterday caused price to move above Monday's high, but we were unable to close above this level. London appears to have brung the high of day. So as long as we are below that level, I will look to short pops back down, targeting the previous day low. Now, when I say pops, that could be, a ridiculous rally, what we got today, back to the upside, or it just depends on how the market delivers, right? That's why I go, after I write my macro, then I write my actual plan. I start with the range, right? So the range, look to short the highs and lows of the range, right? And then if we break above it, or we close above it, or we close below it, break and retest off the highs or the lows. You can see just looking at price action, we stay in a range. So, this was on the Dow Jones. I think this was like a 400-point range. So like it was definitely it was a 600-point range. It was definitely a playable range, right? But the high was from 42,543 to 42,379. The low, 42,133 through 41,894. Bullish to the extreme, I was looking to trade longs off the 4-hour demand zone, right, at 686. We never came down there. Bearish to the extreme, I was looking to trade shorts off the 4-hour supply. We never came up there. So essentially, if we never go to the extremes, then the white box is all you need, right? Because even if we push above this previous day high, we don't close, right? So that's still a valid short area. So let's go down a little closer to price and let's see how price was delivered on the day. All right, drop down to the 15-minute. Again, I didn't trade this instrument, but all of the instruments basically delivered the same. They were all in a range, so it really doesn't matter. All right. So if you start the day, right, I start my day. I've been trying to start my day inside of London, right? So today I was successful. Who knows what tomorrow may bring? I may fall asleep. I don't know. Right. But if let's say you're a New York trader, you didn't trade London, 3 a.m. London's high is right here at 42,482. As long as this high is intact, we're bearish on the day. But the other part of the thesis is the dealing range is down here. As long as this low from yesterday is intact, we're bullish down here. which puts us in a range, you see? So if we're not breaking the low, we're not taking the high, we're in a range. However, what do we get early in the morning, right? Let's turn our macros on, right? And let's see how price was delivered. Coming down to the 5-minute, right? We take a look and we trade down off of London at 6:30. Right? And I said, hey, we don't have an established high yet, right? But the market looks to be trying to put one in. So at 750, we established the high, which means now we have a high and we have a low. So the objective of price now inside of 929.30 open, we just displaced 600 points from the high, right? So inside the open, we're below midnight, we're below London, we're below previous day high. Like there is like absolutely zero chance I'm looking to short this lower. None. And you shouldn't either, right? Like objectively speaking, if the market drops 600 points before it even opens, you know what I mean? Like it is what it is, right? Like, so, all right. So we trade down, and let's go down to the 1 minute, right? And if you guys have ever watched me trade the Dow Jones, you know this is like my go-to move right here. I missed this trade on the S&P because I went to the bathroom right before the open. Boy, that was an expensive piss, right? But anyway, the market traded down into 930, dipped down below that at 931, put a beautiful, nice doji candle in, came down, held these lows, which is exactly what I would have loved for the S&P to do, because if it did this, I would have got an entry. But instead, it just went ape shit to the upside. It was just like, boo, 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 boo. But the Dow Jones actually gave you a shot to get in, right? It bull flag, broke the high, came back down and held the low, right? Which was beautiful. And then pushed up and then gave you another nice slow opportunity to get in off 950 and pushed up. The S&P 500, I don't know what the NASDAQ looked like. I haven't checked it yet, but the S&P 500 did not look like this. I can tell you that right now. It did not, right? Like this thing didn't start basing until it got like up here somewhere in comparison. But once it got going, the Dow Jones rallied. And again, this is a lot of people got to be careful with this, right? Whenever we're leaving discount, okay, headed to premium, the last thing you want to do, I don't care what macro is here. I don't care what level you got here. The last thing you want to do is start shorting this shit in the middle of the range, right? Like that is a mistake, right? The market needs to go to where the liquidity is. Inside of here, this is all zero print liquidity, right? Meaning the market did no buying through here, just all selling. So when it comes back up, it's going to come up through here to fill the zero prints on this side, okay? A lot of people will look to get short because they seen all of this selling. I'm going to get short at the daily fib, ran. I'm going to get short at this high right here, ran, right? I'm going to get short at London high, ran, right? Until the market starts to put in a sequence of price where it's ready to go the opposite direction, you got to chill, right? You got to chill because you won't blow your account initially. You'll just fuck up your psychology first, right? And then after that, the account blowing comes very soon after. Trust me, I know, okay? So we came up here inside of 950. Yeah, we traded up into 950. I get it, guys, but structure trumps everything. Look at how we get up here. Like, does this look like it's about to come down? It doesn't. Market pushes up even higher, pushes up even higher. Now, I was telling everybody in Discord, I said, hey, look, if you're struggling to get in this, right, don't chase it if you don't want to. You can, right? Instead, what I'm doing is I'm going down to the 5 minute and I'm just marking lows. Every time we break up, I just mark a low. Be like, okay, where we come from? Where we come from? Here's a low here. Here's a low here. And I just wait for the market to shift and break those lows, right? And then come back up and take those highs, which is crazy because we broke the low here, right? This low right here at 509. We came back up and took the high. I actually took this trade on the S&P 500. My stop loss was just too tiny. The market ended up running the high one more time. And then finally it started with the downtrend. And at that point, I just said, you know what? You won. You won New York, right? Like I'm gonna take my money and leave, right? Turns out that was the high of the day. The market ended up displacing and it was beautiful from the rest of the day, right? But if we look, where's our context clues here? 1025, 1045 macro. If we're trading down, it's because we're about to go back up, right? So my issue that I should have seen was I should have just waited for 1045 to print or waited on 1050 because that's the true macro, right? If I waited on 1050, I'd have let this thing displace a little bit. 1050 comes down, breaks the structure, and then comes back up and fails right here at 1110, right? Sometimes patience is your best friend, especially if you know you've already missed the move. You feel me? So we traded down into 1125. We broke the structure, came back up into this cluster here, right? Twice, once inside of 1150, again, the true macro, right? Then we just started to display straight down. It was just a straight bleed out, right? But notice, right, if we go back, what didn't we do, right? We go back to the 15. The lows at the bottom are still intact, right? This low is still intact. We double bottom here, and now we put in another higher low. Even though we're doing a lot of selling, right, the bulls are taking price higher while the bears are allowing price to actually move up higher, right? So pay attention to what's happening inside of this consolidation. It probably will be key moving forward into tomorrow's price action. All right, let's move on to the S&P 500. Again, I didn't write a plan, but I can briefly describe to you exactly how I'm looking to trade this because it's the exact same as the Dow Jones. The only difference is instead of demand and supply, we got NWOGs at the extreme, right? March 16th NWOG is at 56.8350. March 9th NWOG is at 58.23, right? We got our previous day high at 770, daily fib is 714. And again, previous day low at 65.75. Our range was between 702, 5702, 5682, right? 5743 and 5770. Easy money, right? We looking to short the highs, long the lows. That's all you got to do. Like literally, all you got to do is wait for price to come up here. And as long as it doesn't take this high, you short the highs, long the lows. That's it. Me, I got short 2 times. I got short 3 times, rather. I got short in at midnight. I wrote it down for 10 points, got out. And then I got back inside of London at 57.58 for midnight and then 57.56 in London. I took the shorts down to just shy of settlement for like 25 points. And then I was basically kind of like done for the day, especially since after I cut the short, it dropped another 50 points. But I still told myself, well, I still want to trade, so I'm only going to risk 300 of what I made on the day, right? Turned out to be, kind of a good idea, like, depending on how you're looking at it. But let's talk about the 929.30 macro again, right? Because, again, it's not a macro, it's just an opening range, right? That's all it is, okay? But it's very important and extremely powerful. Weekly fib, new week opening gap, previous day low, all fair value levels, right? As long as we held the weekly fib, that also meant that we were holding these lows here, right? And if we were going to trade down into the 929.30 open, it is a guaranteed long right here. Notice, like I said, the S&P never came back into this little gap right here. It saved it for later. Instead, it just pushed up, consolidated above the range, and went crazy back to the upside, okay? So, again, I didn't take any of this, right? I didn't take this long at all. I missed the entire thing, right? And I'm not upset about it. Like, it is what it is. I missed some trades, and that's okay, right? But we trade down into 950, push up. I mean, we was just straight up the whole morning, right? Finally, we come to 945, and this is where I took my loss, right? Or 1025, and this is where I took my loss. So we came in at 1025, came in bullish or bearish, right? And this low right here was what I was marking, right? And again, I don't think I did anything wrong other than the fact that my stop loss was just too tight, right? But this was the low here. And all I was waiting for is a candle closure below the low, right? We closed below the low, right? And after we closed below the low, now I'm anticipating the market running this high. Everything above this high should have been a sell for me, right? Instead, I let the market run the high and I said, okay, I'm going to take it long right here. I got short 57, 58, 50, not long, short. And I put my stop above this high reality is the invalidation point was up here. So I should have at least given it, you know, the max, which is like 10 points on one mini for me. Had I done that at 58, I could have easily given this trade on my entry at 58.50, right? I could have easily given this trade 10 points and it would have came nowhere near, right? Nowhere near, well, 58 was there. If I would have given it my high of 10 points, it would have came nowhere near my stop. And I could have actually added to the position once we got the displacement on this side. So moving forward, I think for me, the lesson learned on the day is if I'm already up and I'm feeling like I don't want to risk nothing, I'm just not going to trade, right? I'm just going to teach, right? And talk about the market. I'm just not going to trade because when I don't trade, I mean, if I do trade, I cannot trade scared, right? And what I was doing, I was trading not to lose, right? And that's a recipe for disaster. Luckily, I gave myself a strict number. Like if you lose this much, you got to go, right? And that was it. So anyway, market trades up, stops me out. The real entry was at 65. Boom, we get displacement. If you wanted to take another entry at 59, beautiful. You could have took another entry on the other side of 1050, right at 59 again. We finally get that true displacement, and this is where you can definitely short the market, right? Because now 1125 brings us down, true displacement, and now we're just waiting on price to sweep these highs again, right? And give us the true range. Boom, we pop back up, we take out the high, put that little double top in, no more of that crazy rallying after that, and then it was just straight flush mode to the downside, right? And what did we come back to? We came all the way back to what I said the NASDAQ or the Dow Jones didn't do. The Dow Jones filled this gap, so it didn't come back here. If you look at the Dow, it came back to the daily fib. It's because this gap right here, this fair value gap right here, needed to get filled. The S&P left it open, and then they ended up filling it inside a PM session, right? So that was a little nugget that I saw today. Very, very clean price action though. Like it was slow, right? Methodical, but they're doing that on purpose, right? Like they're trying to get you to be premature with your entries because they know if they can get you to be premature, you're going to be either early or late. And they're preying on that so that they can get you to close your positions early, or even worse, just get you to get stopped out, right? So on the NASDAQ, again, same story. Like I could do this all day, right? As long as you're drawing your chessboards, right? The market is doing the same shit every day. Trade down into 930, sweep the lows, come back into, what is this? Comes back into 615 CE right there. Boom. Right down in the 630, pops up, no chaser, just straight up, right? And again, I get it, guys. I get it. Like when you miss a move that's freaking, I mean, what is this move on NASDAQ? This move has to be like, yeah, 346 points. When you miss a move like that, I get it. Your natural inclination is to want to short it. And you're right. But this is why I live by a simple rule of if we're below midnight, I'm not looking for shorts. I'm just not doing it, right? If we're above midnight, that's when I start looking for shorts. It's that simple, right? Because if you do that, midnight was right here, right? 20,086. The high of the day, 20,102. If you just literally shorted at midnight, you only needed 20 points of room. And you'd have won the trade, right? So, you know, that rule's not for everybody, I guess, but I mean, it works for me. It keeps me out of a lot of trouble, right? Even though I know, you know, it looks so good right here, right? I know it looks good right here. I know it looks good right here, right? But you gotta wait till it crosses that line of midnight, right? Once it crosses that line, it's like the equator. It's hot on the other side, right? So one thing I would note about the NASDAQ, though, is we swept the high, right? But we left the PM session intact from the day before. And so did the ES. The Dow Jones, the only one, for whatever reason, went all the way up here for some reason. I don't know. But again, I'm not going to beat a dead horse. You guys can look at the macros and tell exactly how we came down. Came back into this level, filled that fair value gap again, the same fair value gap the ES had behind. The NASDAQ just filled it as well. So we'll see what price action has to develop. The one thing that I will say, although we're getting large moves on the day, the volatility index has slowed way down, like a turtle's pace, right? It's important to note and realize, like for future reference, the first 2 weeks of the market of any month are usually the most volatile, right? It has the most news in them, red folder news, all that good stuff, right? So that's when you really want to like try to kill this market. When we get to those last 2 weeks, if it's not earnings season or something like that, like it gets kind of mediocre and dead. So you can tell that just by looking at the VIX. I mean, the first 2 weeks we was way up here. We was pumping. We got to the last 2 weeks and now we're coming down, right? So just be aware that VIX needs to hold. I said yesterday, it's okay if we break this low, but we need to hold 1828, right, through 1796 on the week, right? Or else we're going to start getting slower, much slower price action, and the movement is going to get smaller. So you really want to get the VIX involved. So hopefully, maybe by the end of the week, going into next week, we start to get a little bit more engagement by the volatility index. But that being said, this is the market review. My name is T Hives. Hope you guys enjoyed this. Let me know if you have any questions. Post them in the Discord. I'll catch you guys on the next one, man. Peace.